Welcome to today's episode of Financial Fluency. Today I have Rachel Michaelov with me, the founder and CEO of Empire Tax Professionals. Thanks for joining me, Rachel.
Thank you, Jen, for having me today.
Sure. You know what? I feel like this is such perfect timing because this last year, I actually did defer my own taxes because of some complicated things that happened last year and got an unexpectedly large October 15th tax bill. So I am so excited to talk to you about what to do when these things happen to people who are freelance or small business owners.
Sure. I would love to help you as well.
And I also want to talk about the fact that you are a small business owner yourself, being the founder and CEO of this company. Can you tell us your story of, going from employee to being a small business owner yourself?
Sure. So about 13 years ago, I was hired by a very big company, and it was one of the biggest companies in New York City. We did taxes for like top celebrities, I'm not allowed to mention which top celebrities, but top celebrities, they were getting about 7 figures, 8 figures, some of them. And I always wanted to work for such a big company. I was hired. I was really excited to work for this big company. And they said that my hours would be 9 to 5. I would come in at 7:30, earlier, just to make sure my boss, liked me, whatever, just to do a little bit more than I can. And at 7:30 a.m. I would come in, you would see the whole staff in the office, and everybody would look at me as if I came so late. And I'm like, what's going on? I came in at 7:30. At the interview, they told me that I should be coming in at 9. And I don't know, I feel like they expected a slave at this huge accounting firm. They told me that my hours would be 9 to 5. I left at 6:30 and it was still not enough. And I'm like, you know what? I was a mom of 2 back then. I had my kids were 3 and 4 years old. I left my home when it was really dark, outside, and I came home when it was dark. It was so hard to be a mom and work full time. I said, I'm really sorry. I couldn't do it because it was just too much. They really wanted all of me, and it was just too much for me to juggle between my husband, my children, and I really wanted to be there for my kids. So I decided the whole train ride home, I'm like, you know what? I started crying and I'm like, I really want to be there for my kids. These are special moments that I wanted to be there with them. And I said, I have to quit no matter what. I'll figure it out. And I quit that week. I gave them my 2 weeks notice. I quit and I started my own business. I don't know what I was thinking. I really don't know what I was thinking. I incorporated, I had this big vision in my mind and I knew what road I was going. I just incorporated, and the first year I got 80 clients.
Wow.
Yeah, I got 80 clients. I hustled. I did whatever I can just for me to get, those 80 clients. The second year, I remember, I got 169 tax clients. And now we have over 1,000 every year that we do taxes for.
Wow. So obviously you've hired, you've expanded from being.
Of course. Yeah, of course. But you know what? It was one of the best decisions I've ever made, leaving my W-2 job, because then for sure my kids are now 11 and 12, and I have a 3-year-old and I'm pregnant with my 4th. But it's it's just, making your business a priority and family is just the best thing that I've ever done. So yeah, having a business was the best thing.
A lot of the women that I talk to leave for similar reasons. I mean, I feel like the whole corporate structure, it really wasn't built with us in mind, with women
Exactly.
who are moms, who want to, have dinner with their kids and breakfast too.
Exactly. It was so hard for me. Forget it. I just felt like I was just such a bad mom. I had a guilt trip every single time I would leave them. I'm like, you know what? I didn't give birth to these kids just for someone else to watch them. I would have a babysitter from a daycare to another babysitter to another babysitter. And I'm like, no, I really want to be there when they're so small, and work could come later. And then I created something where I made triple the amount of what they were giving me, plus the flexibility and being there with them. So I could go to their kindergarten, or first grade. I couldn't even go to their first grade class reunion. It was just so hard. I don't know. And most of the accountants there were men. Maybe, I don't know, maybe it was, I don't know, there was one woman there, but I was like, you know what? I don't know. It's just not for me.
Yeah.
It wasn't for me. It was hard.
Well, I know especially around tax time when everyone, you get this flood of paperwork coming into the office.
Right.
Imagine especially leading up to April, there would be extra long hours worked in places like that too, probably.
Yeah. Yeah. They demanded weekend hours. They really wanted you to leave. You know, I said, they told me 9 to 5 and I agreed to that. But then when I left at 6:30, the whole office was looking at me like I fell from the roof. I'm telling you. And I'm like, what do you mean? It's 6:30. I want to go to my kids and have dinner. And it was an hour train ride. So I could be there 7:30 to just put them to bed. And no, they said, no, you need to be in the office for longer, at least 60 to 65 hours a week. And I'm like, you know, this is just impossible. Yeah, most large accounting firms during tax season, they work at least 60 to 65 hours a week, and that's mandatory.
Yeah. So
Yeah.
obviously you've set things up in your own company differently.
Of course. Yes, 100%. I have mostly women working with me, and I hire more people so I can make sure that every single person in the office works less. So I have a work-life balance, and everybody leaves 5, 6 o'clock max. You know, if they want to leave for their kids, they do. I always give them that flexibility. I never, you know, I give them everything that they can. They're like my kids, my employees. I love them.
You know, that's something I love about female business owners is I feel like, particularly if you were forced out of traditional employment because of reasons like this, then when women build their own businesses, they build in the kind of structure they wish had been there for them.
Exactly.
Yeah.
Yeah.
That's really great. And also hiring more women who are moms, you know, we all understand the kind of struggles that we have.
Yes. And if somebody, like, I think my assistant this Friday, she has to go for a PTA meeting, and she's like, I'm really sorry, I could stay Thursday later. I said, no, you're going to leave Thursday regular time. I'll pay you for Friday. You could leave at 1 o'clock because you need to go there for your daughter. Not a problem at all. I totally understand. I have kids myself. Go and enjoy and be there when you're at PTA. Don't think about work. We will take care of it. It's not urgent. Everything is going to be okay. And she was just so happy.
Yeah.
And I love that. Yeah.
Well, and that makes for a lot of loyalty too, I think, when you treat people like human beings who
exactly.
Yeah. Yeah. Well, that's great. So I'm curious though about the first year, because accounting, it seems like the kind of thing where a lot of people stick with who they know. Was it hard to get those first 80 clients? What was that like for you?
It wasn't hard at all. I had to put like ads in newspapers, and you know, I got a lot of people that were like W-2 employees. Not many business owners. You know, back in the days, 12 years ago, there weren't that many businesses that back then. You know, people that were working for W-2s here and there. I mean, it was a struggle for just like everything else. But the first year I was able to get 80 clients, and I was shocked.
Mm-hmm.
You know, and that was within a 4-month period.
Do your clients tend to be more women than men? Or is that affected at all?
No, either way, no. I also had men tell me that they won't hire me as an accountant because I'm a woman. I had a few people tell me that, and I was so hurt. And this was years ago. And then 2-3 years later, they hired me. And I'm like, what happened? What happened? And they're like, you know what? The other accountant is not doing what he's doing. We want to give you a try. Because they would call me to confirm if the other accountant is doing his job. And I'm like, but you have him, you know, why are you calling me? I mean, it just doesn't make any sense. And they're like, we really don't want to hire a woman accountant. And I was so hurt that they told me that. But no, most of my clients are both women and men. I don't know the percentage.
Yeah. Okay. I was just curious if women tend to hire women accountants more or not.
I think now it's the new trend. I think entrepreneurial women want to hire women. And I've heard it in the past where they said, oh, you know, you're a woman, so I want to work with women. I had people tell me that. Women tell me that in the past, like within a year or two at least. It's like a growing trend, I think.
Yeah. I think it's supporting each other again.
Exactly.
You know, and the loyalty a bit. So how has it affected your own family going from W-2 employment to you owning your own business, like financially and everything? I mean, it sounds like it's been a good move overall.
Oh, it was the best move. I've made more money than I've ever, you know, I mean, I've been flourishing. Thank God. I can't complain. You know, what I used to make in a year, I could make during the 4 months, you know, just for tax season, and then take the whole summers off with my kids if I want to. And I did that the first couple of years until I got really busy. You know, so the first couple of years after I quit, I would take summers off just like teachers, let's say, and fully get paid for it, right? And I would take my kids to the park, museums, blah, blah, blah. And it was the best thing ever. My income grew every year. And then as my income grew, I was able to hire employees, delegate most of the work to them. Just be there in the morning for them, give them breakfast, come at home at 5 o'clock if I wanted to, not be like, oh my God, I would not have like a bad look if I left. My employees were trained enough to take care of what needed to be. And that's it. And even during tax season, I actually gave birth with my third baby. I gave birth on January 15th, which is the first day of tax season.
Wow.
Yeah, and I was able to go to work a week later, but because I did go to work a week later. But I mean, because I'm just a workaholic and I love to work. But I had my baby next to me. I was able to have my nanny next to me at all times and just manage. But I was able to call her, have the baby cam open at all times and view it. But if I was working for a W-2 job, I don't think I would have that flexibility.
Yeah. No, that's much harder for sure.
Yeah.
So I can see, especially in the first years when you had W-2 employees as your tax clients, they really only need that once a year tax help. But
That's correct.
have you gotten more entrepreneurs and small business owners who, doing their quarterly estimated taxes
Yes.
and want calculations and want to actually get tax planning help,
Right.
to plan throughout their year? Do you do that as well?
Yes, I do. So I actually specialize now in small business owners and entrepreneurs. The past 5 years, there has been like so many businesses opening. And now I believe I have maybe 500 to 600 business owners that we advise yearly out of 1,000. Mm-hmm. So I would say, every month we do their monthly bookkeeping, we do their payroll. If some of them have sales tax, if they're selling a tangible item, we do that as well. We do their tax planning twice a year. And I love advising tax planning. With small business clients. A lot of I always get invited to speak. In Chamber of Commerce around the area, and just to give support to business owners and give them tax tips. So yeah, that is my specialty now, and I love working with small business owners. I love it. I enjoy it.
Have you had times where you've looked at someone's books and realized, oh my gosh, you're not taking all these deductions, or you could be saving so much money just by adjusting a few things?
Yes, all the time. I actually have a few clients right now that we transitioned, about 6 clients last month, 6 big clients that make over between $500K to $1 million. And we reviewed their books. And for example, one client, he didn't even take his home office deduction. And I'm like, I reviewed your return and he paid, I think he paid like $13,000 in taxes, and I don't see a home deduction. I don't see his phone bill. And I don't think he knew that he was able to deduct his phone bill. And I'm like, you work for, I think he does like e-commerce. He does like, Amazon sales. So I asked him, do you use your phone? He says, yes. And I'm like, so why don't you deduct it? And then I asked him, do you use your home office? Like, where do you work out of? He's like, oh, I work from home. I have my home, he has his whole office. I think he said he has his whole basement. He allocates that for business. And I said, did you know that you could write that off? And he says, no, I didn't even know. So now we're amending his return for him to get most of the tax money that he overpaid back. Mm-hmm. And you could do that.
Yeah, this is in my home. I'm in my home office, and behind this wall is my husband's recording studio. We have a record
cool.
we run, as well as the storage for the vinyl records. We do limited vinyl records and then online download sales. And we didn't take it for a long time because I always had thought that might be a red flag. Like my fear of audit was huge, in spite of the fact that I don't think I've ever actually, I've never intentionally done anything wrong. I was just so afraid of the experience of being audited that I wouldn't take things, even travel. Sometimes, we go to festivals and stuff. I would be afraid to take travel because I didn't want it to be a red flag. And my accountant eventually was like, we can take a lot of this.
Exactly. Yeah. Like, don't be afraid of an audit. Don't be afraid. I mean, some of these IRS agents can be so nice. Believe it or not, they're so nice. I just recently had an IRS agent, and I don't even know how. My client was a real estate agent for tax year. She was audited for tax year 2014. She had no records. I mean, she didn't have records for rent. She didn't have records for her travel. Her husband was an Uber driver. I don't know how, I swear. I don't know how. The IRS agent said, you know what, Rachel? And she saw me being pregnant. Maybe that's what, she was a woman. I don't know what happened. She said, I'm going to allow everything. And I'm like, what? I'm like, what do you mean what do you mean you're gonna allow everything? She's like, it's okay. It's okay. I feel bad. They're elderly. I'm gonna allow everything. At first she said that they owe $3,000. We sent them a check. We sent her a check for $3,000. This week we got the check back from the IRS agent and she said, don't worry about it. Everything is okay. I'm closing the audit. Please give this money back to the client.
Wow.
Yeah, I was shocked. I need to actually, I mean, I don't know how, what, I don't know. I'm still shocked to this day, but it's crazy. Some IRS agents are really understanding. You know, they're very nice. They're not that bad as people make them seem. And, you know, if you really, but the only thing is you really need to have a good accountant who can, you know, who can really speak to them. Because some accountants, I had IRS agents tell me in the past, where they're so mean and they're really disgusting. And when your accountant is really mean and disgusting and they feel like they know everything, then the IRS agent feels like, oh, I'm going to show this accountant and I'm going to start, you know, looking at other things that I shouldn't even be looking at. And IRS agents told me that in the past.
Yeah.
They
Getting
told me that.
combative, like.
Exactly. We're not here in a fight. We're here to help the client together. And I was very respectful. I was there. I was at the audit for like 5 hours. We were talking about her, you know, her son who was, I believe, I don't know, there was some problem with her son and I started being sympathetic. I started helping her. And maybe because of that, she just said that. I don't know. I don't
That's
know.
interesting.
Yeah.
Well, and I have even heard of times where an audit happens and they find that you don't owe anymore and maybe even you get more back.
Yeah, exactly.
You know, like,
exactly.
but
Yeah, because
probably having those records, having them kept properly the way you do in your office for your clients, that's, I mean, if all the records are there, then you don't have to be afraid, right?
exactly, 100%. You should always pay for your expenses through your business bank account. And, you know, they should always have a separate bank account, no matter how small their business is. And then I would always recommend buying things on Amazon or online and then having a, you know, folder on their desktop where they could keep PDF receipts and keep track of everything. If they ever get audited, they could just print all those documentation and that's it, you're good. And if the IRS needs additional documentation, they'll give you 2 weeks for you to find it. They're not gonna, you know, say, oh, we're gonna close the audit. They do give you enough time for you to find those records. And sometimes, you know, they don't audit every single line on the return. They audit the top 3 or 4 things on the return that are the highest line, like the highest amount. You know, so they're, yeah.
So these days with so much of what we do being online, how do you have your clients deal with all of that? I mean, we used to have shoe boxes full of paper receipts, right?
Right. I know. Just save it as a PDF, you know, I mean, because now I don't even go buy things outside from my business. If I go buy something from Staples, we save it as a PDF and we have a folder in my email, tax receipts, right? Or even like you said, with travel, right? You're going to have a lot of airplane. When you do have travel, make sure you have a confirmation in an email who you went to, why you went there, how is it related to business? Because just because you had a travel flight to Florida, let's say, the IRS wants to see, why did you go to Florida? Did you have a confirmation? Did you meet with the client? They want like additional documentation. So even if you go to a conference, let's say, they say, rip up the book from the first page where it proves, you know, the teacher's name. It has to have the date and the location. So let's say you went to Florida November 1st and it says November 2nd till the 5th, Florida, Orlando, Florida, and you went to Orlando for this conference and it's directly related to your business. If you're a marketing professional and you went to some marketing conference, the IRS will allow it, no problems at all.
Yeah, that's good to know. Are there any particular programs that you like your clients to use, like to suck the transactions from their business bank account or anything like that?
I would say QuickBooks Online or QuickBooks Desktop. I like QuickBooks, but the only thing is a lot of people think QuickBooks is for regular business owners. I mean, it can be really complicated for a non-accountant to use QuickBooks because they're not accountants. I had a lot of like virtual assistants and entrepreneurs double count their income. Because I had a client who double counted her income by $20,000, and after reviewing her QuickBooks Online, we saw that there were a few. I mean, it's just such a mess. It's such a mess. Sometimes I do recommend it depending on their experience level. Sometimes, to be honest with you, if their income is less than $100,000 and they don't have that many transactions, I would recommend an Excel sheet because you can't
Okay.
double count, you can't double count there. You'll see income January till December. You'll see their income, their deposits. They could verify the information in QuickBooks, but I really don't want them to double count their income because, why would you pay more than you have to?
Yeah. Well, I know sometimes just setting up chart of accounts and, just the setup can feel
Right.
really difficult for people who've never done it before.
Exactly. Or what they could do is get a training. I'm thinking of even getting a training for, creating a training for business owners and just say, this is how you know if you did this right. And this is how you check your work. And this is how you set up your chart of accounts. Once you have that guidance, you're good. It's just a few buttons every single month and you get your profit and loss report. That's it.
Yeah.
It should be easy.
Because, I feel like there are people in business who really don't know if they've made a profit or not until their accountant tells them at the end of the year, once
Yes.
everything's in. And it is so nice to be able to see month by month, like when are my most profitable months and who are my most profitable clients.
Exactly.
Yeah.
Exactly. And I talk about that all the time. You really need to know your bookkeeping every single month. Every single month you really need to see and analyze your profit and loss report because let's say in January, if you made $20,000 and you had a $5,000 loss, in February, you could say, what am I doing wrong? What am I doing right? And just duplicate it. Maybe say, okay, for February, I want to make 35K and have a $10,000 net income. But at the end of the year, your January is history. There's nothing that you could do to change anything for January. Also, a lot of people don't know when we do their bookkeeping, there's so many people that eat a lot. They use Uber a lot, right? If you look at how many, the total amount of your meals or your total amount of travel, and you really see the total amount, you would stop yourself from from spending more than you have to. At the end of the year, when you see that large amount, it's already too late. You can't really make that many changes. So I always recommend doing a P&L every single month, reviewing your income and expenses in detail. And another thing, I have doctors, let's say, and big entrepreneurs that have a net income of $100,000 a month. Every month, their net income is 50K, 100K, 75K, and they don't know that they need to make their estimated payments. So at the end of the year, they have a huge tax bill and they don't have the money to pay it. Or they think that they have X amount of dollars in their bank account and now they have to give half of it to the IRS. It's a shock for them, So I say every month, if you know what your net income is, we calculate the estimated tax payments for them. And we say this month you should pay $5,000. This quarter you should pay $15,000 as opposed to $50K at the end of the year. So that's how you plan ahead because people think they have all this money in their bank account and it's theirs, but you really need to know what's tax deductible, what your net income is, and pay your estimated payments quarterly when you have a huge net profit.
I remember the first year when I made enough that I should have been doing quarterly estimated taxes and I didn't, and I got the penalty at the end of the year. I was like,
Yes.
I was so surprised. I was like, what is this? Why am I being penalized? And they said, oh, well, you should have done, quarterly estimated taxes. And I was like, well, I didn't know I was approaching this threshold of some kind to tell me to do that. And I hadn't set it aside. I knew that I was going to need to pay taxes, but I wish we would have talked, my accountant and I, before I got to that point. And since then, we do have meetings to look at both, my estimates based on last year. But honestly, for most of us who are freelance or,
it shouldn't be based on last year. Last year's history.
Yeah. So we end up, needing to calculate the actual income and then and then they send me my little,
exactly. Vouchers. Yeah.
I like getting those, so then I'm like, okay, I know what to do.
Right. Yeah. I always recommend doing the actual amount because as entrepreneurs and business owners, we always feel like, oh my God, if I did 100K last year, I want to do 250K this year. That's how I am. I want to, because I doubled my clients, as I mentioned. My first year was like 80. I said, okay, I have to beat 150 next year, or I have to make 160. And I did. I just have this challenge, and I'm more challenged in in business. So when you're making, if you're going based on last year, the point of it is when you go based off last year, the IRS does not give you an estimated tax penalty. That's why most accountants go based on last year. If your tax was $10,000 last year and you paid $10,000 this year, then you don't get an estimated tax penalty. That's what the accountants want to avoid. But if you made 100K last year and this year you made 250K, you're going to owe X amount of dollars, and it hurts the entrepreneur. Now you need to either be on a payment plan and pay 25% in tax, with penalties and interest, and you have a huge bill that you did not expect. So we mainly help the business owners to save money and for them to be more prepared.
Well, and something that happened to me last year was my husband and I sold our equity in a business. It was a business that we owned part of, and we I ended up doing a donation to try to offset some of the, I did planning with my accountant, but somewhere in the midst of it, there was I guess it's 30% for the donation. You can do 30% of a certain line on your taxes. And for some reason, the first time he ran it through, that calculation was 50% instead of 30. And by the time we just got to October 15th, I ended up with a very unexpected $22,000 tax bill that I just wrote a check for, but I was not prepared because I thought, based on the calculations we'd done before, that I thought I'd paid up pretty much what I needed to do. Another thing I realized was I had never sold a business before, and I didn't understand the tax implications of liquidating my assets, paying off the debts, and I didn't understand, when you do a net worth calculation, I'd never figured what it would cost me to get out of that business. So now that I know that, I'm like, oh, if anyone ever asks me about something, I'll be like, oh, make sure you talk to your accountant to really understand what the tax implications will be, because it was a lot more than I expected.
Yeah, it's a big shock. You didn't expect it. You have all this money in the bank and you're thinking it's yours, or you need to get a loan from someone or get credit card debt just to pay it off, because why pay the IRS $25K when you could just pay $22,000? It's cheaper for you to make a payment earlier and on time. And I bet you that the fact that you made it on October 15th, you're going to get a penalty because the payment was due April 15th and not October 15th. There's going to be a fine because you get an extension to file, but you don't get an extension to pay.
So I paid what I thought we owed at the time.
Oh, okay.
We ended up owing more because somehow, my accountant and I talked about it a lot. I don't know, the program that he ran it through did it at 50%, at 30%, which I was like, but that's not my fault. But at the same time, I'm the one writing the checks, so.
But there's a way of you removing that penalty. Just call them and ask them to remove it.
Okay.
And they will do it for you. I'm telling you, I love IRS agents. I love them. They're
I've never
so
heard
nice.
that statement before.
I know. I love them. They're so nice. I don't know. If you do the right thing and you come from a, honest point of view, they'll respect you back. But if you willfully do something fraudulently, they're going to really, get you. And most of the people that I deal with are honest. And all of the people, or else I wouldn't take them as a client. The clients that I work with are honest. They really want to do things right. And that's it.
Well, I think most of us just feel intimidated by the tax laws themselves. It seems so complicated. I mean, like I said, with doing the donation that I did to try to offset some of the taxes, I thought it was an off the top deduction. I know I can spread it over 5 years, but I didn't, when I made that move, I didn't fully understand the calculations involved.
I see.
So I thought it would save me more money than it ended up saving me.
Right. It's just a percentage.
Yeah. So that was an interesting experience too, because I'd never donated a large, something that was worth quite a bit of money before to try to offset taxes. So there are so many things that until you actually experience them, you don't really understand. So for me, I know for you understand the tax laws because you're an accountant, you're in there. But for the rest of us, it's like I give all these numbers to my accountant and then I wait and see what's it going to be at the end?
Right. Well, you know what? Small business owners come to me all the time, and the number one mistake that I see is they pay their estimated payments based on gross. So let's say you're making $100,000 and they don't even deduct their expenses. They pay their estimated payments on their gross amount. They need to understand that they could have a write-off on all of their business expenses and then pay their estimated payments on their net amount. But charitable contribution won't go against the business because it's not a business donation. So expenses such as rent, office supplies, phone bill, internet, travel, Amazon, whatever, any expenses, it's a really direct deduction from their gross. And a lot of people don't know that. So when people come to me, like you said, they're so nervous because they think they're going to be paying taxes on the 100K amount. You really pay taxes on your net, not on your gross. And a lot of people don't know that. Yeah.
Well, what else do you think people don't realize, but that they should?
Well, a lot of people don't know when they should hire their accountant. You know, when, like, they think, oh, I'm just starting. I don't have a big business. Maybe it's not time for me to hire an accountant. Maybe I should hire an accountant at the end of the year. I always think, like you said, you should always speak to an accountant, even if you're just starting out. I always offer free consultations to these business owners, just so you know, at least you're on the right direction. You know, I have people coming to me, oh, I just made my first $20,000. Is there anything that I should worry about? I love those questions because at least you're aware of what you need to do. They ask me, should I incorporate? Should I not? When you're not making that much, sometimes depending on the business that you're in, it doesn't make sense to incorporate because who knows if you're going to be making enough for you to open and file a separate corporation. You know, when you open a corporate return, when you open a corporation, you need to file 2 separate returns, one for the corporation and one for the individual. And then accountants sometimes tell, you know, business owners to open corporations just for them to charge more. And I feel like it's not ethical because they say, you know, I have clients that made like maybe $5,000 and accountant said, yeah, you should incorporate. So now they're paying the accountant the corporation fee. They're paying them at the end of the year. They put them on payroll. I mean, you only made $5,000. I personally don't think you need to open a corporation until you make at least like $30,000. And when you know that your income is going to be consistent. So if you get a one check for 30K, I would not recommend opening a corporation. If you have consistent income of like $15,000 every month, then you should open a corporation because you know what the future will be. But I guess, you know, that a lot of business owners, they come and they don't know when they should incorporate, what entity they should incorporate, what's best for them, when, you know, what receipts they should deduct and things like that. But there's just so many questions, and I always offer specific advice for the specific business owner based on what their business is. And I never give general advice.
Yeah, and that makes sense. As you were going through that too, I was thinking about liabilities as well, like protection. If you do have clients coming to say you're a masseuse or something, and someone could slip and fall.
Exactly.
Doorstep, you might need the liability protection too.
Right, but you have insurance for that. Your corporation won't really protect you. You should always have like liability insurance, general liability, whatever. The corporation protects you if just in case a client decides to sue you and they want to come after your personal assets, your personal home, your personal car. That's when, you know, that's when your corporation protects you. But there's so many people that are virtual assistants. I mean, or like marketing professionals. I don't know. Again, it depends on the business that they're in. And then I would advise them if they should incorporate immediately or not, depending on what type of work.
Do you work with people all around the country, or do you just work with people in your local area?
So I work with people in the United States, all over the U.S., because I'm licensed by the IRS, and I'm licensed in 50 states. Yeah.
Wow.
Yeah, thank you.
That's pretty cool. Yeah, because it does seem like, especially for corporate, the way things work with municipalities, like some have different ways of taxing different kinds of corporations in different locations, right?
Right. Yep.
So it's always good to have someone who knows what's going on in your area. But but that also sounds pretty amazing that you can help people across the whole country.
Yeah, I do. And if I have like a client in a specific state, we normally hire an accountant in that state. And we hire them for like an hour or two and say, can you just let us know what we need to know about, let's say, the state of Missouri or New Mexico, you know, just to make sure that we are covered with everything we need to know. Because when we take on a client, we want to make sure we're filing the unemployment insurance, the DOL, whatever. And there's some things that are different per state. So you're right, 100%. We find accountants that are skilled in that state just to make sure we're doing everything we can for that client.
That's great. Can I ask a Las Vegas question or a Nevada question? So I have seen in different books where people are like, you should incorporate your business in Las Vegas or in Nevada because of some law.
Protection, right.
What do you think about that? Of people
I think
not.
it's the stupidest idea. I'm sorry. I think it's the stupidest idea. I had people that incorporated in Wyoming, Vegas, and Delaware. Those are like the top three companies that, or I'm sorry, the top three states that everyone wants to incorporate in, because they think that Nevada, Delaware, well, Nevada has a no income tax state, right? You don't pay income taxes there. Or some people want to incorporate in Florida because there's no income taxes. But I had a lot of people in New York that wanted to do that. They don't understand that the IRS and the state, they tax you where you're doing business in. So if I incorporate my company in Nevada, the IRS the New York State, they could look at my IP address and they could say, okay, where are your clients? Where's your bank statements? Who is your driver's license with? They would ask you these questions. They're going to ask you, okay, if you say that you live in Florida and you put a Florida address on your return, the first thing they're going to say is, show me your driver's license. What address do you have on there? And if it's a New York address, you're a New York resident. If you have a New York bank, then they're going to ask you for your bank statement transactions. They're going to look at every single transaction and see, where did you buy your coffee? Where's your phone? I'm telling you. And if they see that you're in California most of the time or in New York most of the time, you are a New York or whatever that state resident, regardless of where you incorporate. So opening a corporation in a different state, I mean, it just doesn't make sense, because if somebody sues you, you need to go to that state. So if somebody sues me, let's say, and I would rather just go to court in New York. Why would I travel all the way to Vegas, right? But if somebody sues you, since you're incorporated in Vegas, you need to travel to Vegas all the time. So I don't know why people do that. A lot of these major conferences tell people to incorporate in a different state. I don't recommend it. I always recommend opening an entity in the state that you live in, especially if you're going to pay taxes in the state that you live in, because that's where you're going to be physically working.
Okay. That's good to hear, because it sounded very complicated to, you need like a post office box. It sounds like
a registered agent. Yeah. It doesn't make sense.
Okay. Well, that's good. Keep it simple, right?
Exactly. Keep it simple. And if you're a New York State resident and you incorporate your company in a different state, you actually pay more taxes.
Why is that?
I don't know. I mean, if you're a domestic corporation, let's say the minimum tax is $25, depending on your gross revenue. If you incorporate in a different state, such as Delaware or Vegas, wherever, your minimum tax goes up to $300, and it goes up based on the gross revenues that you have. Yeah. So yeah, I don't know why, but that's just how it is. When people tell me they opened in Delaware, and I said, okay, great. Just because you opened there, now you're going to pay $300 instead of $25 every single year.
Interesting.
So yeah, because you're a foreign company now.
Well, it's definitely good to have someone who knows all this stuff on your side. So if anyone listening is like, oh, wow, I really like how Rachel is presenting things and they want to try to work with you, how do they get in touch with you?
They could either call the office, and my number is 212-300-5776, or they could email me, or my website. It's www.empiretaxusa.com, or the best way is just to email us. We answer our emails within a day or two. And my email is Rachel, Rachel, at empiretaxusa.com.
Okay, fantastic. Is there any last tip or closing remark you want to leave us with?
I guess just make sure for all business owners to open their own separate bank accounts. Really never commingle. Please, don't put your personal accounts on the business, because the IRS hates that. And then they're no longer nice to you. Hire or get a free consultation in the very beginning from your accountant. You don't need to pay anyone. Just get like the proper guidance from the very beginning. And I guess that's it. Yeah. I guess that's it.
On the bank accounts, one thing I'm thinking of is a lot of people, when they start being like a virtual assistant or offer some kind of online service, they're using their PayPal account. And often people do tend to have a personal PayPal account. I know you can upgrade it to a business account. That PayPal account, what do you think about the PayPal account being their business account?
I don't recommend it. I would recommend for them to have a separate business account, and then collect the payments from PayPal and transfer the deposits from PayPal to their business. And any transactions that they have, they would pay from their business account.
Okay.
So because they're going to get a 1099-K at the end of the year, and you must report that. It's a very big You know, a lot of people get audited because they don't report the 1099K from PayPal or any other merchant service.
Mm-hmm.
And then it gets really confusing because when you give the IRS your PayPal account and your bank account, it's very hard to track your transactions.
Okay.
So it's just best for you to collect your PayPal payment, transfer the payment to the business account, and then pay for your phone bill and all of your other expenses from the business account.
Okay.
Yeah.
Good advice. Thank you so much, Rachel, for being here.
You're
It's been great
welcome.
talking to you.
You're welcome. Thank you so much, Jen. Have a beautiful day.
Okay, you too. Bye.
Thank you. Bye.